And good morning, everybody, and welcome to, where are we? May 29th, 2020. And this is the TriggerCharts pre-market rundown. Thanks for joining me. Thanks for being here. Thanks for being here every single week. Sorry I couldn't be here last week, but I know that Kevin Hoffman did a great job at presenting some good education, information, as well as some ideas to consider when it comes to looking at a variety of setups. And that's what we're going to talk about today. We have a lot of things to talk about, of course, but also I want to make sure that you, in fact, can put in your stocks, the things that are of interest to you, in order to make sure that you are getting the most out of this each and every Friday. Make sure to tell your friends. Make sure to tell everybody that you know that we do this. This is a free service, part of the TriggerCharts package, if you will. And these are the indicators that we have along the way that are available on the TradeStation trading app store exclusively for TradeStation. All right, so what are we going to talk about? First and foremost, I think we have to go over the disclosures and to make sure that you understand this is for educational purposes only. It is not an offer to buy or a solicitation to sell or a recommendation of any kind, of any sort, of any matter. Investing has a great deal of risk. You can lose a lot of money, and of course you can make a lot of money, but you can lose a lot of money and your principal at that. So we got that out of the way, and let's talk about a few things. Over in the chat, I'm going to type the word in here, right there. In the chat, put your symbols. We'll get to those. We have a variety to talk about. Today, you'll see on the right-hand side, we have, we're looking at silver, which is up about 2.5% pre-market. See that gold is trading up about more than 0.75% today. Crude oil down about 2.5% on supply concerns or build concerns that we saw yesterday, a substantial build in inventories. Futures aren't as bad as they seem. Well, futures are down. Yes, we see the Dow Jones futures down about 193. The S&P futures down 15, and NASDAQ futures down about 4. But there is a fair market value calculation that's in there today, which is pretty substantial. In other words, pretty much trading flat, down slightly. But if the market opened right about now, you'd have a slight move to the negative side, but not as much as being expressed by the futures. So keep that in mind. So investors pretty much own a lather, aren't they? Everybody's all excited about, wow, you know, look at these markets. It doesn't seem like the data matters, and we're just going to pile in. It looks like, for the most part, that there's a one-way ticket on the upside getting new highs. And we heard a lot of people this week talk about that. Jeremy Siegel was out saying that he thinks we can get to new highs this year, and that is possible with all the excess stimulus that's in the system. Today, we saw some reports showed that the savings rate at a historic high, which makes sense, due to the fact that people are getting unemployment or at least money from employment, and they have nowhere to spend it. They have nothing to do. They can't go out and actively spend that money. Therefore, what's happening is that there is a increased amount of savings rate. Question is, where's that going to go? A lot of talk about how some of the stimulus and the weekly checks from the federal government are being piled into the stock market by retail investors. We're looking at things like Robinhood, showing that account openings are at a peak level. Some of the brokers that we work with, as a matter of fact, have talked about how they are also seeing a major, and I'm not talking about small amount, I'm talking about significant amount of new accounts opening. People desirous of taking their money, maybe from their stimulus checks, et cetera, and putting them in the markets rather than anything else. So that is part of the thing that we're seeing right now go on. And investors are pretty hyped up right now, and it is preventing any kind of significant downstroke. At the same time, I want to make sure we're clear, because a lot of questions people, why is the market going up? Aside from technicals, we could talk about that. We could look at all the things that are really associated with this. But one of the things that people are looking at also is the idea that there's $5 trillion or so on the sidelines. And what I mean by that is we see that hedge funds, institutional managers have pulled money out of the system, out of their equity holdings, a lot of money just sitting there, and there is a need to find a home for that money, especially in an environment where we have interest rates at what? Like 0? Well, can't make money on that. And even with a deflationary environment that we are in right now, we saw the PCE prices come in today, I think negative 0.4 on the headline number. We saw PPI, we saw PPI come in as well, pretty much to the deflationary side. I do believe from all the work that we've done here that there will be inflation on the back end of this, because there is this pent-up demand, there is this lockdown, and when we all of a sudden release the opportunity and the animal spirits in a way, if you think about it, where people can go out and at least, if not in a full and in a manner that we were accustomed to, it is possible that people would go out and spend, and that will drive up costs because the supply chain is still a little bit problematic. Meat prices we saw and food prices going up. Gas prices, of course, oil prices are down, but we're starting to see things like gold and silver continue to do well. It's not only on the geopolitical concerns and the geopolitical front of what's going on with China and all the problems we have with coronavirus, COVID-19, but I'll also say that it has something to do with the idea that inflation could be around the corner. And that's what we're seeing here. I mean, we're talking about from this is now an ETF. You have to realize that silver didn't necessarily follow this exactly, but still, we saw the bail and the sell of silver just down dramatically. There's a daily chart on this on the right-hand side, and we saw it go down to 11, up to 16 right now. We're talking about a 50% return on silver in that short period of time. I think there is some thought that people are looking for a safety trade. Silver being one of those industrialized metals as well as a precious metal, the thought is maybe there's some opportunity there. We're looking at this very closely. There's a little bit of overhead resistance in this area, and we kind of back this up a little bit. You can see that there is some overhead resistance, probably up to clearly 17, but we're getting kind of close to that right now, 1654. Not too much of a thought that we can't get beyond that, and from there it's just air. That's on a daily chart. We can kind of go back further and look at that. I would look at the weekly also on this to confirm where those exact levels are. But basically, investors are thinking that right now everything is just fine. The government's got our back. Stimulus will be continuing. And with that in mind, I think there is a thought that, yeah, well, why not invest in the market? We saw a tremendous rotation back from the doldrums that the value stocks were in for some time. We saw that banks and certain consumer staples, utilities did incredibly well over the last week or so. As a matter of fact, there was one day, I think it was Wednesday, it was a 3 times multiple on value versus growth. We saw the growth shares and the companies that have been doing very well for some time really take a hit, and the value companies, the banks, I mean, just out of control. We've also seen a lot of pickup in companies that were left for dead. Party City, for example, is up about 70% today. That was a company that we thought was just going to go by the wayside. Who needs to buy from Party City when you can buy from Amazon or online? You don't need all those stores. And when you're having this stay-at-home order, you're not having birthday parties, and the stores are closed anyway, so what are you going to do with that? So we've seen a lot of this over the last week. A lot of the retail outlets like The Gap, even some of the big box retailers, Macys, have an incredible week this week. I think there's a lot of undue excitement and enthusiasm that's being inappropriately placed on that area. But they were down pretty hard, and I think that there was the idea that, you know what, at this point, as long as they don't go bankrupt, we're in good shape. So we're bidding up those beaten up again. China's in the crosshairs. There's going to be some kind of announcement today. We don't know exactly what it's going to be, but President Trump has said he's pretty unhappy. I think that was the words that he used with regard to China. And they're focusing their attention on the idea that, you know, hey, this COVID-19, this coronavirus came directly from Wuhan province, or Hubei and Wuhan, and it was allowed out. It wasn't taken into consideration to be a point that was very serious, pointing fingers at China, pointing fingers at the WHO. We have to blame somebody, right? It can't be our fault. Nothing's allowed to be our fault in any regard to any degree, whether it's from a politician that is at the city level, the state level, the county level, all the way up through the senators and the congresspersons to the president. Nobody's fault. They did everything just right. We got to find a scapegoat here, and China's going to be the one. Question about, I think today is the big issue. Are they going to bust this trade deal? Saying that China did not live up to their end of the bargain. And even if they talked about the fact that there's a separation between the two, of whether or not there's going to be, on one hand, some sanctions because of the coronavirus and what they did to our economy. And we want to get back because we just had to spend upwards of $3 trillion and possibly more in fiscal stimulus on top of all the monetary stimulus that is going on. We want to get back at them, and they're going to pay. So there's going to be something, and I would think that it's going to be towards either the end of the day, probably after the close, so it could sink in over the weekend without disrupting the markets. And you have that. You also have the social media issue going on right now with President Trump signing an executive order expanding some of the potential liabilities for the social media companies out there, Twitter, Facebook, and the others that are out there, allowing them to essentially censor some or put warnings on some of the political and other information that may not be true or needs some flushing out. So whatever side of the aisle you're on doesn't matter. I'm just saying these are things that are going to be disruptive to markets. Again, it doesn't matter if you think it's a good thing or a bad thing. We're really talking about how is this going to play out in the markets. First quarter earnings came in pretty good and pretty exceptionally good for a lot of companies. As a matter of fact, we saw Williams-Sonoma beat today by a wide margin, and companies that you'd be like scratching your head saying, how did they do that? I think there's a lot of pull forward on some companies. There's some surprises, of course, some beneficiaries of all this, but there is a bit of a pull forward where companies are saying, hey, you know what? Whatever we could pull forward, whatever deals, whatever things that we can kind of say happened this quarter, the first quarter, versus the second quarter, let's pull that forward and do really well, and then we're going to cut our guidance, or at least say we're not going to be issuing guidance, therefore leaving everybody to believe that, well, maybe it's part of the deal. Everybody else is pulling their guidance. We know the next quarter is a throwaway quarter from the aspect of it's going to be really bad, right? The second quarter of 2020 is going to be really difficult for a lot of companies. I mean, there's no question. I don't think anybody has any question about that. There are some companies who will do better than others, but generally speaking, if we can bring it forward and make it look like things are a lot better than they are, or we pull forward second quarter, what do we care how bad second quarter is, because everybody else is going to have a lousy quarter, showing revenue gains and possibly earnings that were a lot better than anticipated for the first quarter. So I think that's happening right now, and next quarter is going to be basically a big throwaway, at least from a conceptual standpoint, that, you know what, let's give them a break. We know how bad it was. Let's see what happens third quarter. That's going to be at least the way that it's going to be shaped by the markets. Whether or not it's true or not is a different story. It's all about how the markets shape, confidence underlying all this, and expectations. We do have this debate about whether there's going to be a second wave that's going to be occurring. Not sure where you stand on that. But there is the thought that, we are going to be opening up all these cities and counties and states in the country and looking at going back to restaurants, malls, and other areas and more travel. How much is that going to really impact the idea that we see another wave coming in 4 or 5 weeks? Or is it going to be just a spike that relaxes and stays steady? And then once we get into flu season, into the fall again, is it going to be something that's going to spread once again? Big questions, unknowns, but there's some bets on both sides of the equation going into this, looking at where this is going to play out. Markets right now are pretty much pricing in all things great, right? We're going to get a vaccine. Things are going to get back to normal, V-shaped recovery. Everything that is going to go just as planned. People are going to go back to work. People are going to start spending. There's going to be more stimulus. This is everything that the market is now pricing in, because if not, if we're looking at somewhere in the, and earnings have been brought down for the S&P for 2020, even if you're looking at a reasonable level of estimation in the maybe 140 range, 20 times multiple is 2,800 on the S&P 500. We're above that. That seems a bit of a lofty expectation for a multiple. So anyway, economics initial claims at 2+ million. We're probably at about an 18% unemployment rate. We'll see that next week, maybe 17 to 18% right now. A lot of people have left the labor force. That's going to skew the numbers. There's going to be some weird statistical anomalies that are going on in next week's numbers. That's next Friday. Pending home sales plunged after some good existing home sales that we saw and some bidding wars that are picking up in that area. Economics next week. Oh, GDP came in at a -5%. That's the second reading for this quarter. Durable goods at -7.4%. Economic news next week. We have automobile truck sales and coming in. ADP unemployment on Wednesday. Factory orders coming in. ISM manufacturing. And then the employment report expecting 20 million jobs to be lost for this month, which pretty much is what we know that right now, and about a 17% unemployment rate. We're going to look at an interesting scenario, what happened with Moderna over the last week. Twitter, of course, under some pressure. Weight Watchers vacillating between a range, Williams-Sonoma, etc. As I said, we see that we have a couple of different people that have put in some requests for stocks. I'm putting it back. I'm going to put the word here, stocks. I'm going to put them here. Oh, let me put your symbols. Put them over there so you can get that. A couple other things I'll mention to you. Thank you again for everybody that has subscribed. There's a 4-hour freebie $199 value, totally free to you. If you do sign up as a new subscriber to the TriggerCharts Commander Series over on the TradeStation Trading App Store, you will get a 4-hour course, an online coaching session that will give you everything you need to know about some of the dynamics of the markets, a real good understanding. And thank you, by the way, for making us not the #1 highest rated. We vacillate the #1 overall for indicators on the trading app store over at TradeStation. So thank you very much for that. That's very much appreciated. And thank you for your great emails. I have received some great emails over the last week of some unbelievable successes with trading from people, whether trading futures or stocks or currencies. I mean, really, people are like, wow, spot on. Came right to the level, picked it up or shorted it, and I made a bundle on the close. I mean, really, so very pleased about that. That's exactly what we want to hear. All right, let's go through a couple of things. Where are we on the What You Need to Know tab? So the Spearman is starting to roll over a little bit here. Actually, let me kind of move forward, see if I can pull this up here. Yeah, that's what I want. The KRI, the key reversal indicator, we see that right here on the right-hand side. Well, the key reversal indicator is showing us that there is a, look over here, showing that we're looking at an overheated situation right now. We're at +4. We haven't seen that for some time. When we do see that, and we do see that there is that kind of situation that is brewing, like we saw here, oftentimes what you see is over the next number of days, the potential for a roll down, as we saw right there. When we start to see clusters forming, we saw that there's 2 of them right here over to the right side where we saw a +3, a +4, a +4. It's still not as overheated as we saw back in mid-April. But the fact of the matter is that we are seeing that there is a substantial amount of overheating that's going on right now. And that's something that I would look for and look at in terms of the overall. So when you look at that, I think there is something to be said about the market has run a little bit hot right now. These are times that you want to look at. This only works on one symbol, and that's the SPY. And it just gives you a broad brushed look at the psychology of the market with a lot of different indicators underlying this to find out how it's looking from a, do I back up the truck and start buying in when I see these clusters happening, wait for a quick rebound? Or does it also look the same when I consider the Commander Series and some of the things we talk about there? So that's not what I want. Here's what I want. All right. So MRNA, Moderna, this is a stock that was pumped up pretty hard by a lot of people as, hey, they got the vaccine and we're going through phase 1 and we see positive results from 8 patients and a press release comes out and the CEO is like on every TV show. And then, you know what? Once that happens, you got to start thinking, what does that mean? We have the CEO that is like doing a pump and dump deal on a stock, on a company that has never put out a drug or trial or vaccine or a treatment ever before. They miraculously have something that works in 8 patients, not statistically significant. Everybody starts talking about Moderna. It's going to be by the end of the year. We see great things. It may happen. I hope it happens. Stock gets jammed up on some positive results all the way over here, up to what? 86. Then the reality hits that, hey, wait a minute. The company issues a secondary right at the same day, right on this day, right here. They issued a secondary bringing in billions of dollars into the company, which is right to do when you have the stock that's flying up as much as it did. But right after they come out with this statement, with the CFO selling millions of dollars worth of shares at the same time, and you're like, something doesn't sound too kosher. So when you look at this and we realize that it went from about 86, it kind of crashed down to about 45. It hit its 50-day moving average perfectly and came down and then started to move up again yesterday and then finished on the lower end of that as well, up a little bit, but was trying to get a bit of a move up a little bit today because, again, once again, we're seeing a lot of people talking about this, but realize this trend has changed. This is the aileron on the bottom right here. Look to the bottom right of your screen. You'll see that we're looking at the aileron. It really rolled over really significantly. The momentum was there, but just stopped dead on a dime right about here, and that is correlating to where we are right now. We're in a short situation that looks to be that it can go either direction right now. I don't know if I'd be short this stock. I think that there is the potential for a lot of players to come out and to keep on pumping this thing, and I don't necessarily know if I would go short this. Okay, but I did want to show you that Twitter Twitter under a little pressure over the last couple of days. Started to really pick up, really did exactly what the market did. But then all of a sudden we got to this level. Interesting, we got to the level that was a peak out. We got in, got out really quickly right there. We got in at about, what is this? The autopilot showed about 31 bucks of an entry. Let's kind of zoom in on that. And then from there, what we had was right about here. Oops, that's not right. I find some of these annotation tools a little wonky. We got in right about at about 30 bucks or so, got out about 34, I'll call it 33 and a half. Right now, we are sitting on a little bit of a pre-market move at 31.50. So let's kind of draw that in really quickly, or at least where we are right now. 31.50 is right about there. So I think now we'll take that. I want to kind of move that a little bit, because where I think you have a lot of support on Twitter right now is where we have a line that goes across a long way, is about 30.44. I wouldn't be surprised if we see it starting to drop into that range. I'm not talking about the fundamentals at all. I'm talking about where we are from a technical standpoint. We're still in the green zone when it comes to the aileron. Starting to roll down a little bit here, but still in the green zone. That's good. Twitter has been pretty much in a sideways motion since March 16th. Look, we really didn't have much trading in there. Wide ranges. Yes, it did go. We had a beautiful short here from about 34 down to about 23. That was great. Sideways motion. Tried to get long here. Failed. Got out really quickly for a very small loss. Got in at about 30 and a half and got out at, what is that here? 29 and a half, about a buck, 3% down. But right now we're starting to see this vacillate. The point I want to bring up about Twitter and why I want to show you this was that there's a lot of news headlines right now and headwinds that are going on with this. It's not something I'd get involved in, especially after I've seen such a wide range. I mean, the range that we're looking at right here on this, where we're seeing that there is this, look at this gigantic, and this is what we see for a lot of stocks right now because of that sell-off. But we see a gigantic consolidation. I'm really not looking to get involved in something like that. I want to see these levels of the altimeter, which these three lines are called, get shorter and smaller, and then we can see it coil up and move from there. Weight Watchers, another stock that we were looking at. It's, again, trading in a range. It was a nice little buy here back in about the end of April at about 21. Got you out about 26. Now trading, where's it trading? At about $24 right now, right on this line here. It's a small little island area. It could drop down. I think that a reinitiation at 22.5. I think that there's going to be some opportunity in Weight Watchers post-pandemic. Williams-Sonoma, I mean, think about this. This is a company that has really overpriced kitchen goods, and all 100% of the stores will close down for all this. Meanwhile, the stock went from 30. Now it's trading at about $80. Why? They came out with unbelievable earnings this morning, and the idea that they are doing really well from the stay-at-home play, where people are hibernating and cooking at home and doing their own thing, calling it nesting. Nesting is the proper term. We're nesting. But the stay-at-home nesting process, people cooking, not getting food from outside, and I guess they're buying really expensive cooking goods to do so. So this stock, interestingly enough, if you look at this, and I'm going to go back, this is actually blows my mind, because we were short this for a while. All-time high back in 2015 at 88. Not too far from there right now. You do have to break above, I would say, right here, that's 79.90, which is exactly where it is right now, to really see some upward thrust. I can't imagine that really continues. I imagine that there's going to be continuing problems with this. But right now, as long as that stay-at-home nesting is all together, great. Luckin Coffee, we've talked about this. We had some beautiful runs on Luckin Coffee, and we stopped trading it right about here in, I would say, January. Kind of got out of it, didn't deal with it anymore. It wasn't looking great. Then it dropped down to 30, kind of just stayed away from this thing. It was getting too wild, too wonky. We saw the range from 40 down to 30. That's a $10 range, 30% range on the overall levels. And then there was some fraud. And if you look closely, you got to look really closely at this. It dropped from 24 down to $1.78 not too long ago. Currently trading at $2.23. It's going to be delisted is the problem. It's going to be off the market. I don't know who's trading this except for short sellers maybe. Macys, this is kind of cool because I want to show this. This is one of those kind of giant L's that we talked about. There was great support that was going on back to about 560. Just couldn't really break below that. It did back here a little bit into what level, $4.50 or so. But you can see all these really dark lines that are really compressed in this L. If we look at this, if I could draw this, go like this. See that L? Well, now we're in an area right now, I think that's about right here, that about I'll call it about $7 is kind of going to be that upside resistance. But above there, if you notice, there is nothing going off right here, right? Look at that. You don't have a lot of overall levels. I'm just starting to mess this up now. You don't have a lot of overall levels in the range right here that you have to be worried about, because it seems like that gap has to be filled, and that goes right to about $12, 12 and a quarter. Now, whether or not that's going to happen with Macys, I don't know, but is the bet that they're going to go bankrupt or they're going to stay in business? That's really what you got to look at. A couple of symbols that came in also from people that I put up here earlier. WB. WB is one of the companies that may be delisted because there is sanctions against China right now, going after what they did in terms of their accounting practices, maybe delisting and not allowing for them to be on this. This used to be considered the Twitter of China, Weibo. Currently trading about 29, where is it now? $30, right at $30. There's nothing good here. Now, we could see the development of an L again, but probably not right here. We did see some decent support at this level. Did drop off from 36 down to 30 just in the last week. That's pretty significant. But this is not something necessarily to trade. This is, again, showing a red, which is a short. When we say it's below the line, when it's red, do not go long. When it is above the line and green, do not go short. If you use that when you're looking from right to left to see where that confusion is in your head, that should I get in? Should I not get in? Well, what you're seeing is that right now it doesn't look like there's an area, because when you take a look again at the congestion area, it's all the way up to 40. So you got to fight like a bandit to get above. There may be a rise potential, I would say, up to there. And that's right at the 33 level. So you got a 10% upside, and who knows where it's going from there, and who knows where it's going when it delists. Somebody mentioned silver again. We'll talk about silver. We talked about this earlier. Take this back a little bit. We had this 1433 line. Remember that? That was a breakout point that we saw, and then sure enough, it did on the 15th. Now looking like it's going to be at 1650, which is right about here, right at the resistance point. You have a block of resistance. You have really big resistance right there at about 1662. You can clear that. That's going to be interesting. Let's change this to weekly, though, and take a look at this. Again, about 1650, 1660 is your resistance zone. Then you have a little bit of a mess inside of here. Let's take off the radar so we can see inside of this. Got some mess going on right about here. I'll kind of draw inside of here, this kind of area right here. You can clear 17 and change. You're in good shape. Yeah. So somebody was mentioning they have a Fibonacci extension. Yeah, those are good. Fibonacci's are great. They're really based on price, though, and it's based on the basic calculation that people do look at. We're looking at volume and price here. Much more accurate to look at. That's why we use that. But that's good. That's good information. Somebody asked me about Netflix. That didn't work. There we go. Netflix, again, benefiting from the stay-at-home situation. I mean, if you're an owner of this, you're hoping for a second wave, as perversely horrible as that is. But that's what you're looking for, that people will stay home. Still having a lot of problems fundamentally, Netflix, but people really believe in this. I mean, just look at where this all started, right? You know, back in 2019, it started moving up. We got that big move lower, then the realization, hey, wait a second. People are consuming. They have to be looking at something to do on a daily basis. So this is, again, one of those stay-at-home plays. Now, let's kind of take a closer look on a daily basis here. Again, you can do this on a 30-minute chart, whatever. Same lessons, and you just port that over to whatever side you want. But when we're looking at, making sure that bell doesn't go off, when we're looking at this and we're seeing that there is an area here, 418, top end right now, potential for some downside, I would say at about the 390 area on Netflix. And finally, gold. People want to look at gold. Gold topping out as well. There goes the market. Nice, going to be open now. With regard to gold, I think there is some upside here, but you're capped right now. You really need to get back above that 163 on GLD. So anyway, thanks so much for joining me. We'll be around next Friday again, and we'll talk about all things related to the markets. And this, go over to TriggerCharts.com. Check out everything that's available. Thanks so much for joining me.